quick intro to folks who are seeing this on YouTube and other platforms. Quick refresher on Pi Ventures and the program. So we are a deep tech venture fund based out of Bangalore, primarily focusing on early stage startups in seed and pre-series A deals. This program really came out as a brainstorm session when we were thinking about the knowledge gaps that today exist in the VC business. So a lot of people know what VCs do, to some extent understand how we operate, but there are a lot of gray areas between those understandings, and we wanted to bridge and ligate what was missing. This is an attempt, case studies driven sessions, one after the other, when we are trying to uncover how VCs operate. My session, preceded by sessions like, how to evaluate founders, how to evaluate deals, how to understand funds from an economics point of view, or what does a career in a VC look like, follows up with deal sourcing, what I'm going to talk about and chat with all of you. I think before actually delving into the topic, given all of your backgrounds, I wanted to actually toss off a question to all of you by asking, many of you have been entrepreneurs, have been in business. So how have you actually gone about creating leads for a prospective client, or how have you created lists of prospective co-founders you wanted to partner with as you went ahead in the journey? A couple of pointers from some of you will help kickstart the session.
So networking, I think, is the biggest thing, that both on getting customers as well as finding co-founders, etc.
Okay.
References to a large extent.
Okay.
Sometimes cold calling also works.
Great. I think that takes care of my presentation to some extent. But yeah, I mean, on a high level, on a concept level, that's exactly to some extent what we're doing in venture capital. Following what Manish said in the WhatsApp group, it really starts with deal sourcing, right? So we spoke about evaluating a founder, we spoke about evaluating a startup. We spoke about economics of a fund, but it all emanates from the startup itself. So before even going ahead to source, or before even going ahead to evaluate a company, we'll have to source it first. Deal sourcing, some people, mainly in the later stages of the asset class, call it deal origination, but broadly in the VC ecosystem, we call it deal sourcing. And from a pure definition perspective and context setting perspective, deal sourcing is a process of creating healthy pipeline of companies that we as investors will be meeting over time. And these are essentially companies which are prospective investment opportunities to us, right? Another term, so as to say, which is quite prevalent is deal flow. So, as a process of meeting companies, we evaluate them. Some we pass, some we take to a next level of evaluation, right? It depletes the pool of startups that we are evaluating at a given point of time. So there is a constant influx of companies needed to keep ourselves busy and to help us do a good job at what we're doing. So that really refers to deal flow. I think with these two terms in place, we can move ahead. Any questions? I can take a quick pause. Otherwise, move on. And in any point of time, if I've moved ahead, you had a question previously, happy to answer back, move back. All right. So, I was generally looking up at a little curious, how many startups getting started up, what's the number of entrepreneurs across the globe, right? This really struck me. There are really 100 million startups getting started up by some approximation across the globe, 500 million entrepreneurs trying to solve some of the biggest problems. What it really means to us, right? Of course, this number is humongous, right? It poses both a problem and an opportunity to us. Problem, clearly, it's one of the ways to get lost in the shuffle. But on the opportunity side, if you look at it, there are multiple shots we have as investors to find the one entrepreneur or that one company that we are really looking for. It gives us multiple opportunities to learn, particularly about a sector, learn about a concept that otherwise we wouldn't have learned just by theoretical reading. So this number and the time, take it with a pinch of salt because these things vary, but it gives both an opportunity and a problem to us. Now, typically, how do we turn these kind of problem opportunity admixes into something where we can really focus at, right? If I just went out today to source from these millions of startups, I would be nowhere, right? So here we really need to focus on certain aspects while going ahead, even of thinking before sourcing. So let's say I have a superset of all startups that exist globally. The obvious most thing to do in order to shrink this pie and have a broader focus is to look at what we at Pi Ventures are really interested in. So we are a deep tech fund. We'll be looking at deep tech companies, which are broadly AI, machine learning, IoT, robotics in this category. Now, even this is not enough, right? Because they might be in different countries, they might be in different stages of their journey. They might not even be looking to fundraise. So then we have another narrower focus, which tells us that, hey, we are an early stage fund, so maybe we should be better off looking at companies which are below Series A, right? Really early stage companies. And ticket size, although it's hard to figure out from just talking to the companies, or even before talking to the companies, you can have some aspect of or some sense of what they might be looking to raise from previous history of their fundraise or whatever's there available publicly. Even that is not enough. So as a venture fund based out of India, we are typically an AIF Cat 1 category 1 fund. Leaving alone the legalities and all these things apart, there's a fiduciary obligation of investing in startups which will have a positive impact in the Indian economy. So we are really looking for India Connects, so as to say. And how do we define India Connects? For example, an entrepreneur or the founding team might have an Indian lineage. They might be born and brought up in India, studied in India. They might have a huge customer base in India, anchor customer base, so as to say. They might even have a big team seated out of India that can be an ops team or a tech team or a product team or business team. And they might also, I think the best case is to have an India registration at the first place in India. These are broadly it. We also look into historical data. And by historical data, I mean, over this 3-4 years of journey, we have certain level of understanding of certain sectors, few technology areas, few types of businesses. And there are companies we have met previously. They might have pivoted and have gone to newer businesses, but the entrepreneurs essentially have remained the same. So valuing their time, right? These historical data, we feed in back to our learnings, and that helps us do a good job at sourcing. Now, at a very high level, these are quite quantitative, objective, measurable filters, so as to say, which we use to create a broad focus before even hitting the laptop to go source towards, right? I'll pause here for a couple of seconds to see if there are any questions.
Yeah, Pratim. So I was wondering, like, what is the reason for the India Connect thing? Is it like in a mandate by the LP, or like you just have some reservations?
Yeah. No. So as an Indian registered fund, right, a certain percentage of the corpus is capped for cross-border investments. The rest is for Indian investments, and a majority of that is for Indian investments because you're an Indian registered fund. So that's where it all comes up. But I think the laws were set in place so as to drive positive impact through startups and through investments into the Indian economy, and that's the rationale which we take in going ahead with the India Connect thing in mind.
Dr. Ruchik, if I may add, there is your point is right. We also have an obligation from a couple of LPs which want to see growth in an emerging market, and India being emerging market. So we look for that kind of connect as well, apart from the regulatory constraint.
Sure.
Manish, is this also to do with your thesis as a fund? Saying we want to find the next big deep tech startup in India? Loosely connected, I would say. That is not that's not a mandatory requirement, right? Our thesis keeps changing with time, so that's a good thing to do. But there are a couple of hard pushes. One is the regulatory, and sometimes from the LPs. Got it.
Great.
The historical data part was not very clear, Pratim, if you can explain.
Yeah, so that's why this pie is quite small. I mean, this is not a set in stone thing. So let's talk about HVAC systems, for example. We have seen so many startups in this space, and over time we have figured out that this is not an area we might be investing in. So it helps us optimize time and optimize or prioritize sourcing better. By no way does it mean that we won't be sourcing the next HVAC cooling system IoT startup, but it really means that maybe we'll prioritize the meeting over something else. Maybe we'll be seeing it through a more gut developed instinct that we've developed through a historical meeting. So historical data gives us some kind of a north star to look into what we've already looked at.
Okay, but you still revisit the ones that you have decided to drop, right?
Yeah, absolutely. And we don't do specific company specific, but sector specific. We have in mind that maybe in this sector, this particular technology, we have seen so many startups, and continually we have dropped. And there might be various reasons. The next best one is yet to be met, right? So that's why, right? I mean, we don't filter out basis historical data. It just gives us a better sort of direction to do it more efficiently.
Also, Pratim, don't you like look at the trends that are going on at the moment, and then like look for startups according to that as well?
Yeah, we do look at trends. Although I think Manish sort of spoke about it, we are quite bottoms up, right? We don't follow trends, and typically, as Manish says, right, when there's a trend, that space is already looked at. So we are actually, as venture funds, trying to figure out areas which are not touched upon. Having said that, trends definitely matter. I do it myself, and I'll cover it as I go through the trends aspect, how I do it.
Okay.
One thing we
Yes,
spoke, I
Manish.
think, in a few sessions back was
Yeah,
about the capital efficiency,
yeah,
right? Obviously, a lot of understanding of capital efficiency will come once you talk to the company. But
yeah,
certain sectors are known to be, requiring much more capital, right? For
right,
example, if you're talking about EV, or
yeah.
I was talking to Manish about smart cities and stuff like that. So, do you account? Does that act as an early filter?
That certainly acts as a north star, I'd say, right? I mean, we might have met 100 EV companies who are capital intensive. They might not have a deep tech moat, or deep tech enough for us. That really gives us a leeway to prioritize meetings better, right? I mean, if five companies come today, and there are some companies which we think, as you said, not capital intensive, deep tech enough, we'll take those meetings earlier than them. So that ways we prioritize, but we don't filter out. There can be a next startup which is absolutely defying what the existing trends have been. They can be extremely capital efficient, and created a product which we don't know about, and totally bust all myths for that specific sector. So historical data is helpful, but not very instructive.
So to your point, right, there is a concept of a negative list, if you will, right? That's probably what you're saying. So we don't invest in very capital intensive businesses. So there is a concept of a negative list also here.
Yeah.
Yeah. Great. So these few pointers at least help me have a very quantitative focus on when I'm sourcing. I think another important part, if not equally important or more important to the quantitative aspect, is the qualitative aspects of sourcing, right? Meeting entrepreneurs, and through these cycles, we have certain learnings developed, and this, when fed back, give us certain patterns, heuristics, human qualities of a founder, and subjective aspects. What I mean to say is that there are certain traits we observe, and again, by no means am I saying that by seeing those traits, the next guy whom I'm speaking to or the lady I'm speaking to, I'll filter them out, but it helps us prioritize and optimize time better. I give an example. I think we covered investable corpus, fund economics, etc. in previous sessions. At any given point in time, every fund will have one last investment to make, right? How do they prioritize? How do they know that they're doing their best job in getting the best shot? So all these things club together, this qualitative focus and the quantitative focus helps optimize and prioritize time better. So that's the essence of having a qualitative bent of mind and a quantitative bent of mind. But I just wanted to make it very clear that this is not a filtration process, it's a selection process. So these things help us do a better job in a more repeatable and efficient manner. Okay.
Pratim, just a question: has there been a situation where the judgment has been completely wrong? Just picking up from, let's say, the founder evaluation session as well.
Yeah.
These heuristics
Absolutely.
or qualitative metrics. Are there any examples where you lost the deal because of wrong judgment?
No, we haven't lost a deal per se. We haven't even lost a meeting, but the perception has got corrected, right? Typically it's to prove whether that perception is right or wrong. If you see a lot of these, deep tech founders, they might not be very good in orating what they're doing, right? So on a very high level, if you speak to them, it might not sound like the most salesy, pitchy guy, right? So if you are really hell-bent on all these things, you might deprioritize them. But that has never been the case that we have not met them or that has gone against doing a deal or not.
So Ankur, that's a continuous process, and there is something called anti-portfolio that we keep a track on, right? So the deals we miss, and then they are able to raise money. Obviously, raising money is only one benchmark. It takes a few years to figure out whether you have really lost a deal. So we are still early in our journey, but we have lost deals, and we will. You cannot cover everything, and there is anti-portfolio helps us benchmark and re-benchmark continuously.
I was actually trying to understand from a deal sourcing stage of the business. But yeah, got your point overall.
Yeah. I think from a deal sourcing point of view, these things help us do a more efficient job rather than, saying that, oh, I don't want to meet this guy because XYZ patterns have been observed previously. And an anti-portfolio also is not just on the heuristics or subjective qualities. It's always after solid due diligence that we pass, and those things might play against us. So these things play a combined role whenever we are going ahead at passing company. But broadly to your question, at a deal sourcing level, it helps us again prioritize and optimize time better because time is of prime essence. So that's what we're doing here.
Sure.
Yeah. All right. Again, I'll have a question for for all of you, right? Or maybe some comments, right? If you have. What are some of the channels that you have followed, right? When you have, some of you've mentioned network, some of you've mentioned going cold. This essentially is one of the processes we follow at deal sourcing in a venture capital fund or any fund to source deals. Any examples of how you have gone outbound? Any one of you or any couple of you can state a few examples.
So I think like demo days are really good to find the good startups because like there'll be a number of startups pitching and they're already like a little bit trained as well. So you get all the information that you require at that point of time.
Okay. Thanks.
I have used LinkedIn quite effectively as an outbound tool.
Right.
I don't know if it works in VC space, but in customers or hiring, it's worked pretty well.
Right. I think that takes care of my slide. This slide also.
Yeah. Conferences. So we're doing pharma B2B. So conferences were a good hunting ground.
Right.
In a more formal setting, I've actually historically used, say, bankers or other firms that are specifically research firms in particular fields or geographies.
Yeah. Got it. Interesting. I think, this takes care of quite a bit of the concepts or maybe pointers that I'll be covering. So in venture fund, it's quite not very different, although there are some technicalities to this, right? So broad part of outbound is to discover who's building what, and it's a fascinating question I sometimes get while meeting company. How did you figure out what I'm building, or how did you get to know about my startup, right? So interesting example in one of the companies I have met. So there was this guy based out of Bay Area working in NVIDIA in building chips and circuits, and I was following his posts. He started coming up with a lot of edtech posts, right? He figured out that in India, answer scripts grading is a challenge because of the language, because of the sheer number of students, teachers' time, etc. So coming up with an NLP engine and an OCR mechanism to really do a good job at it And he was writing blog posts on Medium, answering questions on Quora, regularly coming up with articles. And I just texted him on LinkedIn that, hey, I mean, what's up with you? I mean, you're creating this post. Are you thinking, is NVIDIA having a project on this? And he said that, no, I'm really wanting to create a startup out of India, focusing on edtech and, with these tools and tech. And I'm actually looking to hire a co-founder and sort of educate people on the magnitude of the problem. So discovery through these platforms really help in getting some of the entrepreneurs who are writing stuff on Medium, LinkedIn, and answering really relevant questions on Quora. And then you trace them back to LinkedIn and reach out to them. So that's the discovery part. I think another part which Shubham mentioned, and I sort of spend a lot of time doing that, is to just put my earphones on, sit for 3-4 hours, and search on LinkedIn, right? So over these 8-9 months, I have figured out around 32 keywords I used to figure out who's building what. Some examples are, AI founder, biotech CEO, machine learning co-founder, and eclectic combinations, right? Stealth mode startup, right? And you'll get a list of companies. And then, of course, there's a process with those filters and focus in mind, to look at is this really deep tech? Is this in our interest area or not? And then create a list. So talking about my role, I spend about 20% of my time to some approximation deal sourcing, right? One day in a week, I'll dedicate maybe 3-4 hours, just sit down, create a list, update my existing Excel sheet with the names and LinkedIn IDs, and reach out to them. This is also not enough, and nothing is honestly enough, and we'll get to why it's not enough. We also resort to some of the tools and softwares, for example, Traction, PitchBook, Crunchbase, where we do a filter-driven search, given a specific time period, doing certain filters like AI in India. They'll have a list of companies. We'll match them to what we have and see that how many we've missed and what else to be reached out to. I think another interesting project we have undertaken at Pi is to create a tool for ourselves. It's a data mining tool which will be up in a short period of time. That will be sitting behind LinkedIn, Medium, and all these websites to constantly, dynamically, and incrementally mine data for our per user, right? It'll keep populating a dashboard for us of all these startups, basis keywords, basis our interest areas, right? I think on the flip side is I'm getting to know how to become a product manager, all thanks to Manish, being able to do a PRD and all these things, being able to work with 2 smart interns to execute that project. But yeah, this is broadly it from a discovery point of view. And if you notice, this is very cold in nature. You're trying to research out and see who's building what, and this is secondary in nature.
Pratim, how about universities? Where have you explored?
Sure.
Do you go around universities figuring out who's building what?
Right. I'll just come to your question because that's covered up on the next block, so as to say, right? I think this is one sort of, and you can sit in any corner of the world and do this part essentially. Right. Another approach is to really look at stakeholders who are involved in the ecosystem, and these are broadly incubators, accelerators, and investors. Right. Before even clubbing this, I'd like to say that we always have a curated approach whenever we are talking to an investor or an accelerator. So, for example, we won't be just talking to any accelerator who's doing a pre-seed startup, because that might be well beyond what we are looking at in terms of sector and tech areas. So some private accelerators we know, or incubators we know, do deep tech, for example, Entrepreneur First, Costa Labs, WeWork Labs, Kerala Startup Mission, and I'm missing out a few, of course. And there are some very good university accelerators. Some of the top science tech schools have very good accelerators, like the Indian Institute of Science, SID, Society for Innovation Development, BITS Pilani's Technology Incubator, IT Bombay's Business Incubator. We interact with all of them. Let me give you a couple of examples to make it more realistic, actually. So I think 6-7 months back, me and Rupan drove down to IISc, and these are typically managed by professors and the staff members. So these professors were telling us about what kind of startups they invest, what is the vision to IISc, and what stages are they in. we of course gave a certain background of what we are looking at. And these conversations, when they strike, because of outbound nature, we sort of ask them that, here is an overlap between what you are supporting and what we are looking to support. Can we get an access to these people? This happens across, right? Being an alum of BITS, I get very first-hand access to startups that are coming out of BITS. I have friends from IITs, again, through these incubators, college accelerators, as you rightly said, Prajwal, there's a lot of good deep tech startups coming out. So it's quite imperative and essential that we keep in touch. And the second class is really investors, and they are also of 2-3 different levels, right? Undoubtedly, most important for our conversations will be angel investors, right? How I do it, I'll typically figure out broadly who are the angel investors, right? One way to just Google up and see that, hey, these are the active angel investors. Another way is to really see who are the founders who have just sold their companies or might have raised rounds enough to have liquidated and start investing, right? So again, a little bit of heuristics and pattern matching goes there. But to me, those angel investors are of prime importance, who are backing the tech, backing the product more than having a business outcome of his money, because we are essentially a deep tech fund. To us, tech is of prime importance, followed by business, and again with no priority. So I'm trying to figure out which angel investors are backing tech, being able to validate and champion the tech more than the business. At a broader level, syndicates matter. I'm engaged with a lot of syndicates, especially who are having a more deep tech focus. For example, there's again, taking example of BITS, there's a BITS angel syndicate called BITS Park, and I'm an investment committee member there. Sitting through multiple pitch decks, sitting through multiple sessions, I get to know who's building what, which might not have been covered through these aspects, right? So again, that's a good source. And finally, VCs, right? An intuitive feeling might say, hey, although you're peers, you might be competing for the best deal. So why will an XYZ VC give out a deep tech deal to you? So the VCs who are really in the earlier stages than us, for example, pre-seed, super angel, they have, like the incubators, a vested interest of pushing the deal to us, because if we invest, they get an exit or increase in MOIC, as we have seen in previous slides. So those conversations are easier. It becomes a little tricky when we are playing in a level playing field with other venture funds in a seed, pre-series A stage. So what I have found really stands out for us is, I have, of course, a lot of batchmates, seniors, friends developed over my tenure in venture funds who keep sending me deals, because they somehow feel that if Pi has a first level of discussion with them and validate, that's a good enough deep tech validation. So they to some extent depend on our meetings to vet the deep techness of that company, that's really deep tech and interesting to them. Notice, as I talk from secondary to primary, it really moves from being purely cold outbound to picking up network and growing importance of network, right? I'll move on to more of why network is important, but take a quick pause here to take questions, suggestions, and some comments on what do you feel about outbound.
Couple of questions. One, on the primary side, you said syndicate.
Yes, Swadesh.
Which are some of the tops? You mentioned about the BITS, Pilani one. What are some of the other syndicates you look at?
Sure. Couple of these syndicates I'll chat offline with you. Some of these syndicates, happy to chat on WhatsApp on these and give out names. There are certain angel investors I'm in touch with who are now clubbing up to form angels. There are formal syndicates who are writing first checks to companies and investing in a syndicate manner. So there are a few, and if you look at the patterns of investments, they are also doing deep tech, right? So I'll come to specific names maybe offline.
Sure, that's fine. The other question, I don't know, even that if you want to take offline, is if it's too premature to talk, it's okay. Was about the unique angle on the data mining tool which is being built. If it's too early to talk about it, I can understand.
So the broader vision is what I've said.
Yeah.
It's work in progress. PRD is built out, and the project is to be rolled. How effective it is, I think, and I hope by the end of the course we'll be able to give you some updates on how effective it is going.
Oh, great! That'll be awesome.
Yeah.
Pratim, Shubham this side had a couple
Yes,
of
Shubham.
questions.
Sure.
Interesting to see you don't have angel list in here, because that seems to be one of the areas where a lot of the startups and founders also go pretty early on.
Right.
So any particular reason, or do you not see too many deep tech startups there?
Right. So by no means are my lists exhaustive. If you look at the incubators, right, I've just mentioned IIT Bombay. We heavily interact with IIT Madras, IIT Kanpur, IIT Delhi, right? So, IIT stands for symbol of the top IITs that I'm talking about, which has 3 campuses. So I'm not listing out everything. And on the private accelerators also, I've not listed out everything, every one of them I chat with. The same here for AngelList. So some of the top ones which come to my mind, but indicative of what others we also covered.
Okay. And one final question: what percentage of your deal sourcing ends up being proprietary versus something that is being shopped around in the market with some of your peers? Like rough.
Right.
Do you have any numbers on that?
I'll do. And if you can give me a couple of slides, I'll come to that with specific examples. I have that with me. Does that work?
Muted myself. Yeah, that works.
All right. Thanks.
Pratim, what is the looking at all these channels? What is the usual deal flow for you like in a week? Like how many deals or meetings or startups are you able to meet?
Right. So I just wanted to cover this later, but important to take this question right now. Typically from angels and these syndicates, it's although it's outbound, it's more on them to give me a deal. So it's in a way opposite of outbound. So I don't have much control on that, but I can certainly drive. But on the other aspect, right, on secondary discovery and reaching out, I think over 6 months I have done over 200 sources, and I've sourced more than 200 startups. So if you divide, and it's not a standard weekly process. I sometimes sit just once a month and source 300 startups, updating my list and reach out to them. So it's not a very weightage driven or unitary deal flow that is coming from all of these sources. It's a net mix, and these numbers vary.
And usually your relationship with these guys is like very active, or is it like they pass on whenever they have something?
So if you look at these angel investors, right? I mean, how do they get exits?
Angel investors and incubators both. So is what I'm talking about.
Right. So if you look at both categories, right? At a very broad level, they'll get an exit or some kind of success if a VC funds them, right? So these conversations are inherently easy to strike. But having said that, I try to keep touch points with them, just reach out to them if they're evaluating a startup in any sector, try to help them with that evaluation. So these connections, you have to keep them warm, and there's no fixed interval when I call or WhatsApp them, hey, how you doing? But it's kind of, again, pattern driven heuristics. Once in a while I chat with them, and maybe 2-3 months down the line they'll send across a deal, right? Because they are also very picky, choosy about what they're doing.
Got it.
Also, Pratim, I was wondering, like specifically for deep tech, I think there might be some prototype labs as well that you might be in touch with for accessing startups and all.
Yes, absolutely. So, ISC is one example. There are a bunch of others, like, a lot of these companies, like Airbus and Boeing and Qualcomm, they have their own labs. Intel, they have their own labs. Khosla has its own labs, right? And these are like labs, not the incubator version of labs. So we are in touch with them. These companies, again, we have found them to be more towards the research part, have a long time to commercialization, and hence a little longer time to be relevant to us, but definitely in touch with them so that when the right time comes, we can strike a conversation with them.
Pratim, how much is inbound versus outbound? Or are you going to talk about it?
Yes, I am going to talk about it.
Okay.
Great. So I think, the next best important, metric that we want to achieve, like any other marketing problem, is what if we could turn this into inbound? And this really talks about the power of network, right? And I won't, of course, go ahead in defining how to build a network. All of you know this probably much better than I do. But where do we start in a team like us, right? For Pi Ventures, let's look at how we are built around as an investment team. Be it Manish, be it Rupan or myself. Essentially, we are a decade apart in terms of getting into the professional world, matriculating out of college, etc., etc. So that helps us have a longitudinal coverage of network together augmented, creates, around 20, 25 years of network, which we can bring together, right? Right from senior executives, senior leaders in operator roles, be VCs, to millennial founders who are creating something something very interesting. We use this network we leverage this network to reach out. And also, I think what's also important, and by no means a bias to filtering founders, is the access we have. This is our alma mater, right? Be it first degree connections to IITs or ISB for Rupan and Vich Pilani. These things really help because statistically, these institutes have produced the largest number of successful entrepreneurs and founders, right? Having these connections help, but no way am I saying that the next founder comes, I'm looking at these tick marks to look into. Right now, you have a network, right? Augmented together, a large network. How do you make sense of this network, right? And the whole purpose is to let know of the network that, what we stand for in Pi Ventures, what we are looking at, so that they send across deals with time as they know you more. Few ways to do that will be to maybe organizing and attending events. Manish just a couple of days back chaired and was a panel member for Gallant Growth. And there are multiple such conferences. He and Rupan, they're constantly, chairing or sitting in the panel. I am attending so many conferences. But with the benefits, these are specific tech or product conferences that we are really interested into. One example is having our own event, #Chai, where we have always talked about, how to create a product, how to structure your ESOPs, how to find a partner for your, company, etc., etc. All geared towards helping and hand-holding entrepreneurs or the ecosystem broadly. And what we've seen is that people come back to us saying that, hey, we found this session really important and helpful. And by the way, I'm also building a deep tech startup. Can we meet? So these things really help. I have met so many people who have, brought their friends over to these events who might not have turned up otherwise, but these guys have attended our events previously and have known us and bring people who are starting up. So these channels also help us. I think over time, what really comes as important is that all VCs are playing by their strengths, right? You'll find on LinkedIn, Twitter, and also on Facebook sometimes a lot of VCs are doing PR, right? PR marketing, coming up with different posters on whatever's happening on their portfolio, whatever's happening in their fund, etc. It's fun to look into, but we take a different approach. We look at, we are meeting so many founders, we are evaluating so many companies. What are the learnings we are really developing over time? So we try to pen those thoughts through blogs and articles and create a knowledge base that really helps the ecosystem. And finally, that pushes towards the network. None of these things are exhaustive. And by the way, none of these things are also transactional in nature, right? So quick example, I think a couple of months into venture, I saw Manish and Rupan helping a founder who was not at all relevant to our fund because we've passed them on how to build a product roadmap, tech roadmap, right? And I was curious that, hey, I mean, we are passing it anyway. Why do that? Later on, the answer was very simple. It's a day job. It's what we do, and no questions asked. You have to help founders. Interestingly enough, 3 months down the line, I got an email, cold inbound, from somebody saying that, hey, your partner helped my friend build a product roadmap, and that's how I got to know about you. I'm building this. Can we have a chat? So this really creates an amplified grapevine network, which is really strong for us. I'll give an example which is not related to Pi. Again, company, venture fund names shall go, will go unnamed. But here's the takeaway. We met a company, I think a couple of months back, Manish, the founder, And this guy pivoted from what he was building to something entirely new. For his previous product, a couple of well-known Silicon Valley founders funds backed them. However, for the newer product, they shied away from backing because these guys shelved their seed program, right? This is a tricky moment for a startup because it creates a signaling effect, right? You know, if you have mark investors and then they don't back you throughout, it creates signaling effects for newer founders. He was in a soup. He went to one of these guys and explained the problem. And what was amazing, at least to me, is that those guys, not thinking about the financial outcome, took a write-off at $1 per share. And he was so elated while relaying us the story. And so much so that he said that, you know, next time when I'm doing another startup, the first venture fund to go will be them, right? And that really talks a lot about who you are as a fund compared to, you know, what you can do as a day job tactically, right? And you know that information has come to us. Of course, names masked, anonymized. I'm revealing it to you. So imagine, you know, if you keep doing selflessly, how much network effect you can have. And finally, I think no-brainer. It's very important to do good and great deals, right? Great deals, of course, at a paper level means having great financial outcomes. But my learning has been that it's the process that really matters, right? I mean, you know, founder is giving you time to evaluate his company. Of course, it's your job to do that. So can you really make it process driven, rigorous, feedback oriented, transparent? And even if it's a pass from an opportunity point of view, both parties should come up as better learned in what they're doing, right? And somehow with no weightage, with no priority, these things all add up to our network. And what happens is people really know what Pi Ventures we are up to, what kind of companies we are interested in, what check size, and we keep getting good inbound, so as to say. I think coming to a lot of the questions, happy to take questions. I think I'll take a couple of seconds pause here and take a couple of questions, a few questions for moving on to answer the split part.
Pratim, I just had a question. What are those first, top couple of value adds that that you're focusing on providing right now that will bring good founders in?
Yeah. I'm sorry, I didn't get your question.
So the question is, what are those one or two top value adds that that Pi Ventures promises that brings good founders in? Is it, as you said, you've helped people figure out product roadmap and stuff like that? Is it that kind of mentoring, or is it network? What is it?
I think the way we chat with founders, and honestly, good founders seldom ask for help. They're quite self-sufficient in driving the car themselves. But again, it's one of the questions we keep getting. And what I have seen is, and I have done myself, is to help them with network if you have, right? For example, there have been companies who were too early to us, right? Maybe just a couple of smart folks. They've caught up together, thought about an idea, and just wanted to pitch to VCs. Too early to us, but need some money to create a product. I'll typically get them connected to an angel. Maybe they're stuck in product. Manish will take a session to help them navigate through the product roadmap, the tech roadmap, and brainstorm with them for whatever time it requires. Sometimes they might not be a fit to us from a thesis perspective. We have taken a meeting, maybe through one of the referrals, and they want direction to what funds to meet. We also channelize that to other funds. So these are some of the mentorship or help that we do. Broadly, if you talk about healthcare companies, right? If you talk about any healthcare companies, they'll be wanting to work with labs or hospitals to do POCs. We open up our connects to help them figure out those initial point of POCs. And the interesting part, what I have seen in Pi Ventures, throughout, is that never have we asked the question to ourselves, should we do it? Because we might not even do a deal. So we are doing it all the time, irrespective whether this is a prospect to us or not. So that's the kind of help we are doing, whether if it's a deal to us or not.
Okay. Are there any plans to do this at some scale, like some sort of a startup university or I don't know? Do you have any ideas?
I think all this strategy Manish keeps to himself. Manish can answer that.
Okay.
I think it's difficult, Arun. I think at scale doing this, right? This Pi Fellows itself is an attempt that we are trying to do. It's taking a lot of time. So I think the way we scale is that we put out the information and the frameworks and the learnings out there, but we should not lose sight of whatever fundamental businesses.
Yeah. So I think that ties back to one of the comments I made, right? We are all playing by our strengths, right? And in doing a startup university, making a hello out of campaigns is one part to educate what we are up to. But again, doing bottoms up, writing blogs, empowering people through events, conferences, mentoring people is another side through which you can really attain the same level of network or inbound attraction, so as to say, with time.
Okay, but do you tap into networks or programs that are doing this? Would you like take a guest session at an incubator and talk to the
Yeah, yeah, absolutely, right. For example, there's a very famous pan-India startup conclave called Conquest, which is organized by BITS and a couple of IITs. Last couple of years, Manish has been being a judge for these events. Rupan will be this year. So happy to participate in these events, but uh, we are trying to figure out to some extent that whatever time we are putting in has some direction to it, right? I mean, it shouldn't be all consumer tech startups, right? Because we also need to add value, and that has to some extent tie back to our optimization of time. So we do all these things with a filter or focus in mind.
Cool.
So I think coming to the question, a couple of you have asked, right? Inbound, outbound, pretty intuitive. How do we do it? What it really means at Pi? How has been our sourcing history been, right? So if you look at all the companies that we've met so far, and right now we stand at 1350 companies till date. 73% of some sort has been inbound. You can look at individual numbers also, and I might get a question from that. If we look at some of the companies which are AI first and really interesting to us, and by AI first, I mean companies which are building products and services which can only be built using AI, or maybe AI creates a 10x difference, right? These are really interesting to us. Again, 65% of some sort is inbound. Focusing on deep dive and portfolio, deep dive really means companies which we have looked into deeply from a research perspective. We have done kind of groundwork, taken multiple meetings, done some kind of due diligence. Again, 71% is inbound. And finally, I think the most interesting part to see that 100% of our portfolio companies that we've invested in are some kind of inbound and referral. This gives me two thoughts. One is, I'm trying so hard not being able to skew the pie, thanks to, or not thanks in a way to the reputation Pi has already built. It's heavily skewed towards inbound. And the second question, before I take a sort of shot at it, I'll toss it off to you. If 100% of our portfolio companies are inbound, and substantial majority of the other half to some extent is inbound, why even look at outbound? Any thoughts on that?
I think
So
that's the question we were going to ask you.
I think just because you go out and you have the outbound approach, that's how you create the network, and eventually things come to you as an inbound lead.
Yeah, it's a cyclical process, but yeah, that's one point.
I think I'm sure like each of these meetings also add a lot to the knowledge base of the team as well. So even if the deal doesn't go through, but there is a lot adding to the knowledge base, which ends up helping the inbound as well.
Yeah, exactly.
So I think inbound is heavily dependent on the network you already put in place.
Yeah.
Outbound is where you cover new territories. I think.
Correct. I think, yeah, that's very pertinent points. If you look at inbound by definition, those companies have already been exposed or discovered to some extent. Whoever is sending that company, we are not the ones to first discover that. There are flip sides. These are people we know. So these come at some level of vetting to us from a technology or founder standpoint. That's a plus. But again, these companies have been discovered or exposed to some extent to whatever is good or bad. Outbound really helps us sort of do what we have in control, right? there's nobody stopping us from meeting two entrepreneurs who have just had a coffee chat and thought about an idea, still in their jobs. Nobody's stopping us from meeting them, right? And Outbound really helps you do that, right? uh, One example, through one of the college networks, incubator networks, I got in touch with a couple of undergrads, typical Komsky undergrads, building brain computing interface company, right? Both early in their professional careers and in terms of ideas. But me doing Outbound really helped form a very good relationship over time. And as they matured in terms of, about going about the startup, my relationship strengthened also. And I kept following them, what they're up to, help them on various aspects as they needed, right? So Outbound really helps me hunt companies which inbound won't let me do, right? So figuring out very early stage companies, through blogs. They might not have a company name formed, and there have been many cases I've asked them, I'm going to set up a meeting, what name should I put up as a on the meeting? And this also ties me back to Subrata's point during his session. He said that, majority of the investments Axel has done, they were Axel discovered firsthand. So that's pretty impressive, right? And that is what we are striving to do in VC, catch them really early. So that really helps. I think tying back to Swadesh's point, right? It, it, it always happens that given a point in our journey, we keep seeing various kind of startups, right? For example, I remember last year, I was seeing a lot of companies in real-time locating systems. Two companies seem interested about this space. How do I know more? How do I just finish off my studies on that space? Keep sourcing all those startups that exist in India, or according to our filters, and cover them all. So do a very thematic outbound. And this thematic outbounds also come up with time as we are meeting more and more companies. So although inbound is important, outbound is very crucial. If you look at it in another way, right? Outbound is something you have a control on, or I have a control on. And for an entrepreneur, outbound is his inbound or her inbound, right? Similarly for inbound, outbound for me. So if I am doing the best job in doing an outbound, I expect the other person also doing it. So it plays both ways. Another thing that was there a question?
Yeah, Pratim, one question. On this 100% inbound,
Yeah.
I'm assuming you also mean that none of those were from the outbound channels that you've activated. So nobody from like incubators or anything, or is it the first touch point that they had was through an inbound to you guys?
Yeah, so inbound here really means, somebody who has known us previously period of time, maybe a venture fund, maybe an angel investor, maybe an operator who has sent across these deals, and not a relationship formed maybe post my joining and developed into an inbound. All these things matriculate or graduate to inbound with time. Of course, if I'm talking to an angel investor, with time he'll become an inbound to me, right? He won't be cold for long. These things keep graduating. But here, portfolio really means inbound, right? People who know us, have some level of depth in what we are doing. Sometimes VCs also. These are like those kind of inbounds.
So then, like, passing the deal is actually then the outbound relationships that you had created, right? Then is it technically even 100% inbound?
So, if you look at anything, right, it starts all with outbound, and then graduates into inbound, right? So, you're right. I mean, Manish, whatever connections he's having, it all started with some meeting or some coffee chat that was very cold at first, and then maybe few years down the line turned into inbound for that person to send him a deal, right? So if you take longitudinally, point in time, whatever sounds inbound might have started in outbound at first. But given our portfolio, very objectively to your question, the angel networks that I'm talking to and the accelerators that I have, those haven't contributed essentially to this part of portfolio yet.
Got it.
Also, Pratim, I was just wondering about the inbound cold leads, like the ones that
Yeah.
email you or reach out to you on over LinkedIn.
Right.
Are those also in the portfolio?
So right now, I just had a chat with Rupan to get a flavor of, because most of the deals leaving one have happened before I joined. So my understanding, and Rupan, please feel free to correct me if I'm wrong, were all through some kind of warm network or referral that we've already had, and not a mail hitting the mailbox or cold LinkedIn reach out.
Yeah, all but one.
Okay, all but one.
Hey, wouldn't you expect outbound to be qualitatively better than inbounds?
So that depends, right? I mean, and qualitative has no yardstick to be measured against each other. So inbound comes whenever it comes from a known network. It has certain level of filters to it. Certain, founders are already vetted to some extent.
I see.
Technology. If I'm getting an inbound from an angel investor, who has a good deep tech background, backs only deep tech companies, I know that this will for sure be a good meeting to prioritize and all of us to meet in that way, right? And although I think the way the pattern, the process we follow is to find merit after reading through the pitch decks and talking to the entrepreneur, but some of these network driven inbounds help prioritize meetings better. So another point, what outbound really helps us is to focus on what we call coverage. You'll ought to miss out companies, whatever outbound, inbound you're doing, right? Inbound not in your control, whatever outbound is happening, inbound is happening, you'll miss out on certain companies, right? So to figure out whether we are doing a good job on, or maybe effective deal sourcing, we track coverage. A lot of VC funds do. Coverage is really a ratio of the startups that have already got funded, and those startups are to some extent by the filters that we have set for ourselves, and what percentage of them have we met in our fund, to understand where do we stand in terms of covering it all, right? And this is the broad formula, right? Intersection of all that have raised, and how many of them we've met before they raised by the startup that they've raised, a percentage of that. Typically use databases like Your Story, LinkedIn, Traction, AngelList, PitchBook, etc., to figure out who got funded, and benchmark with our database to understand where we stand. Here, I also wanted to chat about the importance of having a tool in the process, right? So, maintaining a database of 30-50 companies is quite difficult and quite a process. So we use Streak as a tool to in a very disciplined way journal all these companies according to stage, according to what level of meetings they have. Earlier we used to use Airtable, and I think it's very important to use a tool in order to do a good job in journaling and keeping a track of who has met us previously.
Also,
And this,
similar to Streak, CRM and all, there's also something called affinity.co that a lot of VCs use for deals. Is that being used in India?
I'm not sure which funds use it. We certainly don't. I don't also see us using that, unless the coverage is too poor. So there are, of course, quite a few automated platforms to help you do deal sourcing, but I think fundamentally you lose a lot of control on that, and that's the reason we are building it out in-house to some extent. So putting out the outbound effort ourselves, augmenting that with the tool that we have, I think that covers it all. And this coverage exercise is repeated quarterly. Just wanted to clarify, we started this process fairly recently, yet to come up with a number, but for some of the tier one funds, numbers stand north of 75%, all the way to 97, 98%, right? So that's the benchmark some of the top-notch sector agnostic funds are working with.
Also, just curious that
Sure.
like building this tool, like the expenses would be the operating expenses of the fund, right?
Yeah.
Technically, it will come out of the fee.
Okay.
Operating expense is slightly different.
Okay. I think moving on, just to rush over time to a certain level, another very important aspect of deal sourcing, or one of the most important resources to deal source, is to do resourcing, right? And what do I mean by resourcing? I think somebody asked this question at the beginning. There are companies that we have been meeting constantly, right? Some we have passed, some we have met, some we evaluated, and some have been kept in a watch list, right? And at scale, if you see, there are 100 such companies we have to keep in touch with. Some of the reasons we have passed or may have parted for the time being, maybe because the market is not ready according to us. They might not have hit PMF according to us, or our viewpoint of PMF is 4 or 5 months down the line from where they've met us, right? So there's a need to resurrect such conversations with time, so that these companies, in a way, what was not relevant 4 or 5 months back, they are more relevant now. I'll give a very quick example here. Given the current scenario, the COVID scenario, certain segments are picking up, right? I think last year, November, we met a company that was network driven, which was doing microloans for blue collar workers. Very quickly, they were working with Swiggy and all to help their delivery partners get microloans by doing AI driven underwriting through their work performances, etc., etc. To us at that point of time, although the founders were good, it was crowded, was not very interesting, honestly. But I was thinking through during the last week that what are some of these companies, and by the way, we've dropped that company which was still in our database. I was thinking, what are some of these companies which are which we have dropped but are relevant now? If you look at these blue collar employees and workers, they don't have a lot of disposable income. They have and by no means they have a huge income at the first place. So they need these 5,000, 8,000, 10,000 rupees loans, bite-sized loans for a quarter to sort of sail through this situation. That suddenly opens up a very interesting market for this company, because Swiggy is now trying to, or Zomato is now trying to penetrate to as many users as they possible, and they need these delivery partners to do that job. And you can create a completely low churn and loyal sort of employee base by enabling these kind of things. So, and I called up the entrepreneur to say, hey, I mean, how up with the current scenario? And he was, as if he was exactly waiting for my call, that things have changed compared to March and Feb and Jan. Our revenues in April and May have suddenly shot up. So these are some of the things we also keep in mind. It's quite a difficult process, honestly, because it's hard to know which company we dropped or which company we have although we do it quarterly religiously. It's quite easy to forget companies we have dropped also, but we have certain themes and sectors in mind that we come back. And it's also important to value the entrepreneurs through these discussions, so that when you are having a re-conversation, they understand and connect back. So these things become quite important with time.
Pratim, just on that note, when you pass a deal, have you seen any changes in the entrepreneur's behavior in the next stage? Like, are they generally frustrated or thankful?
So there have been multiple reasons we have passed, right? And at least I'm seeing Manish and Rupan do that. We generally follow a transparent approach to give them a good feedback on what we have passed, and entrepreneurs do really value that. There might have been various reasons why we pass them, right? Entrepreneurs might be fantastic. So in those cases, we keep the deal as a in a bucket list to revisit in some time, because we have a hunch that these guys are so smart, they'll understand that what they're doing is not right, and they might pivot. But coming to your question, when we revisit, the conversations is as warm as the first conversation. At least till now, we have not faced a problem, bearing a couple of conversations, I don't remember exact names, where they might not have responded. And there are different reasons, right? They might have shelved the company, they are already through with the fundraise, so might not want to engage in another round of conversation. So I think this brings me to the last slide. I've spoken a lot on deal sourcing, various aspects. We've chatted about and debated on various topics. Quick takeaways, if I had to summarize: inbound is crucial, but outbound is of course important. You can't rely solely on that, so you have to know how better a job you're doing at deal sourcing. So coverage is important. The idea is really to have access to best entrepreneurs at an early stage. Keep feeding your learnings back to the cycle both from a qualitative and quantitative aspect, so that you are being more efficient, more repeatable in deal sourcing. Help founders selflessly. This is something I try to do, try to internalize a lot. And whenever you get an opportunity, source. And that brings me to asking and requesting all of you, if you have 4 deep tech companies maybe in your network, do recommend them to me. Chances are that we have met them, but that will certainly be very helpful, but highly optional. What I've really left out here, that is for Manish to take up, is it's of prime importance to have reputation versus brand, and he's gonna chat about that part.
Okay. Yeah, I mean, it's a simple thing actually. So a lot of people say VC is about building a brand, and somehow I feel it's about building a reputation. And the subtle difference being there is that reputation actually builds by doing things when nobody's watching, whereas brand becomes sort of an explicit form of that. And you could go after brand building without doing the groundwork that is needed. So my general 2 cents on there is that it's very easy to get carried away to build a brand, whereas focus has to be on doing the right things at the right time with the right people. So that builds a long-term reputation, and that creates a brand in turn, and also create good deal flow for you as well, which is important. Yeah.
So Manish, I had a question that I've often heard that VCs promote their own portfolio companies way too much, and maybe look for companies that would complement or use the services of their portfolio companies. So just wanted to hear your thoughts on that.
I mean, every fund has a different ethos on how they promote what, right? So for us, I think we don't go out of the way to promote our companies. Our companies promote themselves, and we sort of help them in whatever way we can. Uh, Not taken a very ostentatious approach on promoting companies out of turn or out of whack. What was the second part of the question?
So in terms of like looking for new investments, do you look for companies that would complement your portfolio companies, or who
No,
would
I don't think that's the
services?
focus, right? That's absolutely not the focus. If it complements, great. I think the focus is whether this can be the next big thing that we do in the fund, right? And can really return the fund. So whether it complements with the existing companies or not is more of a coincidence.
But having said that, during the conversations, if they find a synergy with our portfolio companies to strike a POC, we always make a connect, end up making a connect with them.
Manish, on reputation versus brand, generally, let's say a non-deep tech fund would require a lot more branding because it's also very crowded. And I just wanted to understand, does it take more time for, let's say, deep tech companies to come out and, because exit or the valuation is where largely the brand will be built or the reputation of the fund will be built, right?
Sure.
Is the cycle similar, or is it different for non-tech, non-deep tech and a deep tech kind of fund?
Yeah, I think even there, the reputation is probably more important than the brand. Just to explain this difference slightly subtly, I think all of you must be familiar with this funnel, right? Marketing funnel, top of the funnel, bottom of the funnel, middle of the funnel. To me, brand brings the top of the funnel, right? Whereas reputation brings you in the middle of the funnel, which is more qualified. People have thought about it. In our case, like a lot of people come and talk to us because they feel that we will understand their technology in some way, right? So there is already some reputation that is helping us there. Similarly, in a broader spectrum, as you asked the question, there may be some VCs which have a reputation of working with the founders in a certain way versus others, whereas the brand could be something else, right? Sometimes reputation and brand ideally should be connected, but sometimes they're not. So I think irrespective of which business are you in, I think reputation plays a lot more deeper role in getting things to you versus brand, more getting more meaningful things to you. And brand can build on your reputation, so that way it becomes more solid.
Is that also to do with it being generally a new fund?
What? I didn't understand this question.
So, for example, a Secure and Axel would need way much more weightlifting if they were in let's say a country like India where a lot of startups are coming up, right?
Actually, it's the other way around, right? Because their brand is already established, they have been there, right? So now the reputation of the founders there or the partners over there really attracts the founders to work with them. They don't have a top of the funnel problem.
Okay.
Okay, is any other questions for Pratim? All right. Well, thanks, Pratim.
Thank you.